We want to get to the Fed, of course, but let's start with the question of stimulus. It becomes and seems like it's becoming increasingly clear that 1.9 trillion is not the number that we will eventually get from the Biden administration. It could well be lower than that. It's very likely to be lower than that. What is the number that markets are looking for to compete and continue this momentum?
Well, I don't think it's 1.9, and I think the markets know that. Right. So if the if the Democrats wanted 1.9, they should have come in with 3.8. Right. That's the usual protocol here. So I think the markets are expecting something a little lighter than 1.9. I think that the direct payments are quite important, and employment benefits are quite important as well. So the number is probably a little bit lower than 1.9, but I don't think that the market's going to take that too negatively if it comes in a little bit lower. Do
you think markets are being overly complacent about the vaccine rollout?
So in some respects, yes. I think that the companies and the stocks that suffered in 2020 are going to have a hard time of it in 2021. There's no other way to slice that. I think that vaccine rollout is going to take some time. The effects we'll likely see in the latter part of 2021. Now, the question about whether markets are becoming or investors are becoming a little bit complacent, investors are putting their money in the stocks that did well in 2021 or 2020, and we believe that they're going to continue doing well in 2021. So the stocks and companies that did not do well are really riding on the hopes of the vaccine. Those are the ones I'm a little bit cautious about.
Paul, as we've been saying, all eyes on the Fed, whether or not Jerome Powell will continue with the same level of bond buying program or not. What are you expecting?
So we're expecting some verbiage around when the Fed could make a change, and the kind of the triggers that will allow them to make some changes, i.e., potentially turning off the bond buying program. I don't think interest rates are going anywhere in 2021. I think so. It's going to be more passive coming from the Fed, and Janet Yellen has also supported this as well. So I don't think that there's going to be too many surprises coming from that meeting.
Not too many surprises, but if there is a taper tantrum, can the growth momentum still support stocks?
Right now, there's a tremendous amount of liquidity in the market supporting stocks, and we have a tremendous amount of investors who didn't invest prior to this crisis in the market as well. So there's a ton of liquidity. There may be some volatility coming into the market depending on what the Fed chair says, but that will most likely be a buying opportunity. Now, so we are positive on growth. We're positive on the themes that brought us into 2021, coming off of 2020, but we are being cautious. We're starting to put protection on the downside, and that downside corresponds to, related to the stimulus, related to infrastructure spending at the end of the year, but also related to how efficient the vaccine distribution is over the course of the next couple of quarters.
Paul, what does that protection look like?
So what we're looking at is we're starting to, diversify our portfolio, right? So emerging markets is one of the places that we're choosing to diversify, especially related to China. From a growth versus valuation perspective, Asia is looking better than the developed markets, right? So that's the easiest way to add some protection, is to diversify, right? The secondary method is putting on some hard protection on the downside. So there we would buy puts on the downside. Right now, puts are quite cheap, so actual buying of protection is quite cheap, and that's what I would really recommend is looking at a downside protection put going forward into 2021.
Okay, interesting. It's another big week for earnings. It's a very big week for earnings with the likes of Apple and Amazon. Do you have a view on what we should expect?
So I expect positivity, right? Like earnings beat percentages has been about 85%, going into this earnings seasons, and I think that's going to continue. Analysts may have been overly cautious because of the pandemic, but it's really particular on the themes that are working, right? So if you're in the energy transition space, if you're on the technology disruption space, and also on the IPO market is booming, right? So anything related to cloud computing, technology disruption, and energy transition, I believe that they're going to beat, and they're going to provide some positive commentary, which is going to push up the stocks higher.